Hello guys, how are you guys doing? How are you guys doing?
Good, good. How are you?
So let's start. I'm sure you guys have had a long week. You guys have had a really long week. All right, so let's start. So today's class is going to be based on question and answer. I think the last class we did a short revision, and today's class is going to be just questions you have based on structure, and then I'll answer your questions, and everything is going to be recorded for those who can't attend the session so they can watch the recording. So anyone with a question can ask me so I can answer your questions. And also by the end of the class, I'll just do a breakdown of previous week's trade, right? How I looked at the structure of last week and how I traded. Or should I do that first? I will give you the breakdowns first, then you can ask questions based on that. Or you can ask questions. After the whole question class, I can give you breakdown. So which one would you guys prefer? Hello? So which one would you guys prefer? All right, it seems like you weren't hearing me properly. All right. Like I said that last week, on Monday, this week Monday, on our last class, we had a short revision, right? So now I'm saying that today, right, it's supposed to be a question and answer class, right? So for today's class, what we are going to do today is question and answer. And at the end of the class, I want to just, as bonus, break down my week's trade for you guys, all the trade I took this week on gold, how I was looking at the markets for you guys to understand what I was seeing. So now I'm now saying that if it will be better for me to break down the trades first, and then you ask your questions based on the breakdown, right? Or you ask your questions, I answer you, and then we can do the breakdown at the end of the class. So what would you guys prefer? All right, you want to ask your questions first, then break down at the end of the class. All right, so which question do you have? You can throw your questions at me. I'm all ears for you. Breakdown first, then questions later.
Hello.
Yes, I can hear you, bro.
Yeah, I think I would like the breakdown first, then subsequently we'll ask questions. So we could maybe when doing the breakdown, we could have questions from the breakdown you're doing.
All right, so let me give
Yep.
you my breakdown. So everybody knows gold is bullish, all right? Everybody knows gold is in a bullish phase. We all know that gold has been bullish, has always been bullish, so gold is bullish. So I think I had my last trade was from here. I took this buy. I already explained this buy to you guys the previous class, right? I explained this buy, which I took from here, right? So now price moving up. I didn't take this trade, but this trade was a very clean trade. And I even wondered how I missed it because it was clean. So we had a break of structure from here on this move. I would have taken this, but I don't know how I missed it. Maybe I just wasn't looking. Then this liquidity down here. Right? This liquidity down here. So beneath our liquidity, if you go down to smaller time frames, you will definitely see the zone price tap and flip. But then I missed this entry, but the entry I saw was this one, which was like my first entry of the week. This one. All right, this entry was my first entry of the day. I saw this entry where price gave us the break of structure from here. Right after this, the price gave us a break of structure from here. And then our first pullback is our liquidity, right? So our liquidity stood right here. Then price just bought from, I don't know what price bought from because that wasn't where I entered from. Let's go. You know, in some cases, this could happen in some cases. Price could give you like a 1 hour level and your liquidity would be inside that 1 hour level, right? So sometimes price might just on the time frame you're looking at where you have your setup. Like, let me give you a drawing. On the 1 hour, price will give you this. So pay attention to this, right? This is just a resistance on the 1 hour, nothing else. Then on the 5 minute or the 15 minute, you might see this liquidity, right? This liquidity is inside this 1 hour resistance. Price could come up, take the liquidity and just fall, not tapping anything. Maybe for FVG traders, they might say it's FVG. Price is the FVG. So in these cases, sometimes once price take my liquidity, I just sell, or I'll just keep my limit above the liquidity, knowing that I'm selling from a 1 hour level or a 30-minute level or something like that. Hope you guys understand. Above the liquidity, I have my limit there and I sell just above liquidity. Because in some cases, price might use the FVG and you might check all the time frames and there's literally no logical level that price used. Price just took liquidity and dropped. Everything happened inside a particular time frame level. Hope it was clear. So that was the setup I saw right here. All these things happening here, happened inside the 45 minutes. I remember this rate happened inside the 45 minutes open close flip. Let's check that out. Yes, everything happened inside 45 minutes. Open close flip. So price just took the level and moved from the 45 minute, grabbed liquidity and moved. So people who trade like FVG, people who trade like FVG traders might say, FVG traders might say price bought from FVG. And like this is why I said everything is the same thing, depending on how you understand the concept of the market, because the market at the same time it's giving you the SNL trader an opportunity. It's also giving the FVG trader his opportunity. But we will see our entries on different time frame. FVG trader is looking at the 15-minute time frame and he's seeing his entry. You are looking at the 45-minute time frame, you're seeing your entry. We are both getting in at the same price, same time, with the same bias. Hope you understood. So when I saw this, I was sleeping. If you check, this is 3 a.m. For now, we are living in the same country, so you know 3 a.m. our time is this. This was Asian session. So definitely I'll be asleep. So I didn't catch this. But when I woke up, this was the entry I caught. I saw the entire thing that had played out. When I saw what had played out, I knew that price isn't going to come back down. Just fly. Probably just fly. Price will probably just fly and not come back. So because when I saw the entry, price was already here, just going higher. And I just got in from here. This is where I got in from. Entry would have been perfect from here, but I got in from here. And this was my entry. My stop loss just around this close, somewhere there. Very small stop, I think. Yeah. I had a small stop on this trade like 10 pips or 15 pips. Because it was a risky trade. So in case price just decides it wants to come back deeper, I won't lose much and I can reposition and re-enter. So I took from there and I just targeted price getting to what do you call it, 4,700. That was my target price getting there. And at 4,700, I exited the trade. My TP hit, sorry, because I went back to sleep. And I think this was the setup among my setups I sent today. So this was this trade, this particular trade you can see right here, this one. You can see right here, this one. I'm targeting 100. That was where I got it from. That was the trade I took. But this was my first setup of the week, and this was how I took it. This was why I took it. So you understand this trade now. Let's go on to the next one. I think my next trade was still on the 5-minute time frame. Still on the 5-minute time frame. I took the trade somewhere. I don't know where was the area I took that trade from. Right? Where was that? That area. I think I'm forgetting. Okay, yeah, I took another trade here. So why did I take this entry? This was the next trade I took in this week. So this was the next trade. Pretty simple. Break of structure, right? Break of structure. Liquidity. So this is the same entry model over and over again. It's just flexibility that differs from my experience. So I know that in most cases, most people would want to take the entry from here, as this is closest one to my liquidity. But I always use multi-time frame, like I always explain. So from multi-time frame, I was able to check on I think the 1 hour time frame, if I'm not mistaken. For 30 minutes open close. I think that's why I took the entry. 30 minutes open close. Let's see. Exactly. So this was 30 minutes open close level, but liquidity was inside it. So what did I just do? I waited for price to take my liquidity, then I bought. Feel me? So my limit was just, and I also saw it from the FVG perspective that okay, guys trading FVG would see the FVG as their entry point. So it was like both sides. Hope you guys are understanding. So the 30-minute level was right here, right? And I had my liquidity to go here. So will I buy before my liquidity goes out? No. So I will just instead just buy below the liquidity, just take the entry below the liquidity. And also FVG guys might see this as what their FVG entry. So this is also a very nice entry. Same setup. So I'm taking from 30-minute open close. So buy here again. Safest target would be to take out this high and mid below. This would have been the safest target for like 1 to 5 hours. While I was targeting higher up here, and price played around, went up almost to my take profit, but I took partials and then break even. So this was that for this trade. And I think next trade I took would be this one. Now, for this trade, I have to explain the whole bias behind why I took this trade, because I made a very big mistake that caused me to miss an entry, but that's fine. Because for this trade, I had this view for price to take a, now looking at this break of structure from here, this structure break from here, and then this liquidity from here. So when I saw price coming here, I wanted to buy, but I was very skeptical about this level. I wanted to buy because this level had what multiple time frame confluence on it. This level was so strong on multiple time frame with this liquidity below it, with this liquidity above it right here. But I was in doubt because of this setup, break of structure, liquidity, and this level. So I was in doubt because of this. So I said, you know what, let me see if price will come here. I sent this setup out, and once price started buying, what I looked out for was this. I was looking out for this. Once price started buying, I was watching out for this setup. I think I was on the 5-minute time frame. Yes. Yeah, 5-minute time frame. So on the 5-minute time frame, I could see that price did something like this. right? If you look at the trend, I told you guys that what we look at is trend, follow the trend. Whenever we had an uptrend right here, right? A low, a high, and price trended up. And then our last higher low got violated, got broken with this candle here. Last higher low got broken. So that's the BOS. Then price did our first pullback, which happens to be our liquidity inducement. This is inducement. So this is our inducement right now. So where do we take our entry from? What's the next level we have? This one.
Bro, what is the difference between liquidity and inducement?
I can't hear you. I can't hear you, bro.
What is the difference between liquidity and inducement?
Okay. We are going to be treating liquidity as a topic from Monday. But let me just give you an insight on what you asked based on your question. The difference between liquidity and inducement is that liquidity, right, signifies an entire area where money rests in the market, that the market needs to clear those areas. So you can use liquidity for targets, right? While inducement is a kind of liquidity that is used for entries, like price usually leave an inducement right before an entry point. So price induces entry point with inducement. That's what validates an entry, right? If the entry doesn't have an inducement, it's not valid, right? So before price will give you an entry, price has to what? Give you an inducement. An inducement is usually what? Price giving you, let's say this is your support, and price does something like this. Leave a low that is going to get swept when price taps your support. So this inducement here is what makes this support valid. While the liquidity would be an entire trend being swept out, or equal highs, or an entire range high being swept out. It doesn't mean you enter after the range high is taken. It doesn't mean you sell after the range high is taken. No. Hope you are getting the point now between liquidity and inducement.
Means inducement means a missed level. You mean to say that? Missed level.
I can't understand what you say. Just type your question. I'll read from what you typed and I'll answer you. Okay, so this is what I saw that made me take it straight. So when I saw price, yes, inducement would miss the entry point, and then price would come back, take it out, and then use the original entry. Like in this case right here, what the price do? Price creates inducement using this level, right? Creates the inducement for this level. Now, after this level gets run out, this inducement level gets run out, price then sells. Hope you understand. So this is inducement, and then the next level you have is what? The support break become resistance, and also this level. So price comes in and we respect that, and price gave us what? A break of structure. So fast forward to New York session, I saw this setup here, this break of structure, and then the first pull liquidity, right? Liquidity, then my entry. This I was marking the open close flip, that's the open close break as well as the resistance. So this is my entry. So I sold here with my stop. Now, this was a perfect setup that would have been a good win for me. My stop just above there, about 30 pips. So this would have been a good winning trade if I had just targeted like this low or something, or targeted somewhere here for like 200 pips, and I'll be having like a 1 to 6 hour. But instead of that, I was targeting, because I was expecting price to come down here, I was having my target this one. And I was in good profits, and then price reversed on me. Now, check out why price reversed. Why did price reverse? literally because of the break of structure from here. And then this liquidity that price created here. No, this setup was so confusing for me. And then we had this resistance break become support. It already got tapped here, but price still came back inside it before moving. And then flew all the way up. Went higher, higher, higher. And hit me out for break even. Then we move on to the next trade I took. So this was what? TP. Partials and break even. Wow, this one I had no partial, just break even straight up. So this one is TP. Partial and break even. And this trade was perfect setup, perfect entry, wrong direction. I think that was same with this one. Perfect setup, perfect entry, wrong direction. Because this was all-time high and price just wanted to turn around from here. So I thought maybe we'll make another high, but price turned around, respected this break, turned around from here. So perfect entry, perfect setup, wrong direction. Right? So after this setup from here, after this one, then I didn't trade till okay. Then today we took this trade, took this setup. That was Friday, right? Yesterday we took this setup on Friday. Yesterday, so we had this setup. Now, how did I take this setup? What did I see? Same thing. Break of structure. Liquidity inducement. First pullback, liquidity inducement. Now, this would be a trade that most would miss because they would want to take what? From here. And I will not say you are wrong because you're not wrong. It's the one after your liquidity. But one thing I saw was this. On the 30, I saw that price was already inside this level here. And also, people would trade FVG. This would be them saying price is reacting from the FVG. Price take liquidity and drop. Because people who trade FVG might say price reacted from FVG. So when I saw this, I decided like, you know what, putting your entry here might be a plot for price to miss your limit. Let me just take from here. At least if I'm wrong, I will only lose money, you know, risk is managed. So I took from here and price just dropped. Price dropped. I took from here. I had two entries, by the way. One entry was directly on the 30-minute level. Another entry was once price swept this limit. If you look at my screenshot, you'll see there are two entries on this cell. Yeah, think. Yeah. One entry was the moment price swept the liquidity, tap the 30-minute level, I entered there. Then once price swept the liquidity, I took another entry on market execution. Then stop loss can be just like here, and you can target down. What would be your target? For price to sweep off all these liquidities here. All these liquidities to get swept down. All this build up of liquidity. What be your targets? So you can target all those liquidity being swept up. Like just like this. So you can see how clean the sell setup was. Now comes to our buy setup, the one I shared with you guys yesterday. We had same thing again, right? How do we look at it? We had this downtrend from here, high, low, lower high, lower low, lower high, lower low. Last lower high gets diluted, gets broken. Now, first pullback is what? Liquidity. Yes, sir. Right? First pullback is liquidity. So for this trade, price used, I think price got here. Okay, price used this for this trade, right? But when I entered this trade, what I was looking at, the level I marked out, my entry was 30-minute level. 30-minute level. Resistance break becomes support. So this one was what I marked out. My entry in this trade. So this was my entry. 30-minute level resistance break becomes support. That's just below, that's just sitting below our liquidity. So buy from here. Stop loss just beneath this one. So in case price comes to this level, we don't get stopped out. That was why I put my stop loss just beneath that one. And TP, all-time high. So you can see how clean setup was. Once TP was hit, right? Once TP was hit, I took my next setup. What was my next setup? My next setup was here. Break a structure from here. Now I'll tell you why this was my break of structure. Why this one? My break of structure. Not this, not this. The reason this one was my break of structure was because on the 30-minute time frame, on the 30-minute time frame, I was paying attention to this break of structure. So I wanted to see price returning to this break of structure. This level. I was paying attention to this on the 30-minute time frame. So when I saw that, so it already narrowed my focus. So this now narrowed my focus to this area, right? So looking at the 5-minute time frame, around that area, I could see it looking so clean that, oh, price created a very good structure around here to pull back into our 30-minute structure, whereby we had a break of structure and just the liquidity first pullback, our liquidity seated right here. Now, how do we take our entry? My entry, I just took my entry from what? This resistance break becomes support down to the support for our market. So because you already know that gold is bullish, so you don't need to stress much. So my target was 5,000. I was targeting gold getting to 5,000. Yeah. This was my second buy entry for yesterday, because yesterday I had 4 trades. I had 1, I had 2, I had 3, then the 4th entry. So my 4th entry was this one. So why did I take this one? Go to the 3-minute time frame. Now, on the 3-minute time frame, we can all see what price gave us right here, right? Our last lower high, broken with the body close. This was why I took this trade. Yes. Then we had liquidity, first pullback. Now, in some cases, first pullback, you say you want to take here because it's trying to put us in liquidity. But one thing I noticed about it was that on the 30-minute time frame, price already showed its hand that because on 30-minute time frame, we had this open close right here. So I knew that price would be reacting more to this open close that we had right here than this support, right? Price will want to react to this open close. And then we had our liquidity that was inside the open close. So I saw all of this as just what a refinement of the open close. And once price got into the FVG on like the 5 minutes, price got into the FVG around here. I also used this one. It's mine. Once price got into this level, I just bought. And then price rejected yet again. And I confirmed that once price rejected and closed above the 30-minute level. Confirm that, yeah, price is really bullish. Once this rejection and closed above 30-minute open close, confirmed to me that price was really bullish, so more buys. So that was literally the reason I took that buy, that other buy entry. And that was my reason for taking that buy entry, this next entry here. So targeting 5,000 there, thinking. So all of these entries, they're not random. Same setup, same everything. We already know that the bias is bullish. Here, for myself, my bias was what? Take out this liquidity. Now, for the guy asking me about liquidity and inducement, now this is the difference. This is liquidity. Price wants to sell and take these liquidities out, right? Clear these liquidities out. Now, this is inducement. A liquidity left before zone to validate it, right? While liquidity is what an entire area where you could target. Liquidity could be a range high. If price is ranging, then you buy from here, you target the range high, or liquidity is resting above the high. Liquidity could be a swing low. Price would come and take your swing low. Liquidity could be a whole trend compression. Price would sell off, take out the whole trend. So all of these are liquidities. While inducement is simply just a pullback price is going to give you that sits before your level to confirm that that entry is valid. If we have market structure shift on multiple time frame, which time frame do you consider? Okay. Like I said, consider trend, right? Before you look at your market structure shift, look at the time frame that shows you the trend best, so you can understand where shift occurred, so you don't mark the wrong shift, right? So let me look for a very good example that could be very useful. Think this one. Okay, I'll give you a very good example right now. Okay, this is one. Now, if you look at most time frames, if you look at most of the time frames, right? Most time frames had the shift in structure from here. Most time frames, you see it from here. And this was where they had the shifting. But why is the 5 minute better? Because on the 5 minute, I could see a trend. Which trend is that? Sorry. Pulls back and makes a high. Now, this is our, so in this case, this is not my last higher low to get broken, but this is my most recent higher low. Do you understand? So now, most time frames now would mislead you to think this is my higher low, my inducement. Then what do you do next? Sell from here. Most time frame with this, and you would get the sell that would end up taking you out soon enough, right? But on the 5 minute time frame, you can see this whole clean trend that this is not your inducement, but this one is your inducement. Now, if you have this one as your inducement, why would not just take this level? After all, price reacted from it. Good. You won't take that level because it is not inside your structure. This is where you broke. Price has to return into the break. So you won't take that level. You want to take a level that's inside your structure. And which level is closest that's inside your structure? I think left shoulder, 5 minutes above your inducement. So if you were looking at simply just the 15-minute time frame, you would not see this. Definitely wouldn't see. You definitely wouldn't see this. You definitely just say break, liquidity, and entry. So you need to look at this is why if you have multiple entries, and this is why sometimes you say it didn't work. I was stopped out, blah blah blah. Yeah. So you could take from there or even higher. Let's look at the 3 minute time frame. So you look for the time frame that shows you the trend, and you use the trend to determine where you take your entry from. Okay, on the 3 minutes, it's even better on the 3 minute time frame. On the 3 minute time frame, it's even better. I can't understand your I don't really understand what you said. Please, can you come again? I don't really understand what you said. You said in an example, I did what? Yes, I took a bullish trade in the recent example because this was all-time high. Price was bullish, and I was taking my buys to make a new high. But I'm just using this as an example to explain to you that this is how you would have looked at the structure if you were on live charts, right? Another very good example of that is even this recent buys we took right here. The recent buys. If you are looking at the 30-minute time frame, you would want to take your break or shifting structure from here, right? But if you're looking at the 15, you'd also want to look at your shifting structure from here. Maybe you could call this your liquidity and buy from here or whatever. Or on the 5 minute, you would consider the trend. On the 5 minute, this was a whole downtrend from here. Then low, then break trend. So you will look at the trend to know which one you are going to take, right? You look at which time frame is showing you the best trend. And overall, multi-time frame is just the best way to analyze. You have to solve through multiple time frame, and also experience would play a crucial role in also helping you know which level is the best one, right? Experience, always backtest. I always tell you guys this. Backtest, spend 3 hours a day on the charts. If you are done spending 3 hours a day on the chart, you could send your questions to me. Come to me with questions and I can answer you. Because some of the things you ask me as questions can only be answered by experience. When you've observed price behavior consistently and you see price doing a particular thing all the time, you can say, okay, that this is really a theory you could add, and then you backtest that particular thing and you can see that, yeah, this thing really works, right? But for most people, they don't backtest, they just attend class, and once class is over, they don't check the charts till the next class date, and then they will say they don't understand. Backtest experience will play a long role. I'll end the link and I'll send a new link for your questions. Multi-time frame is simply you see something on one time frame and you switch to a different time frame to see how it looks there, to see which time frame gives you a cleaner perspective of the setup. That's simply what multi-time frame is. See if both time frame are in sync or if one of them is giving you a cleaner picture, because each time frame brings something different. Like the 30-minute charts, right, is made up of six 5 minute candle, right? So 5 minute candle would have to close 6 times before one 30-minute candle prints. So in that case, of course, 5 minute candle closing 6 times has printed a lot of stuff that would not be shown on the 30 minutes. The 30 minutes will just, So in some cases, 30 minutes might be making it easier or more complicated because the 5 minutes would have much more levels to consider, right? And by having much more levels to consider, it would in turn be making it harder for you to choose. While if you switch to the 30-minute time frame, you would only see one clean level, something like that, right? You might be having just one single break on the 30 minutes. That's not so clear. While if you switch to the 5-minute time frame, you could see a whole nice pattern, trend, and structure that could enable you pick your entry better. That's multi-time frame for you. Just switching between time frames to see the setup from a different perspective, to see how clean it is on this time frame versus this time frame, to know which one best suits your style. That's what multi-time frame is and nothing else. So multi-time frame is nothing more than looking out for the cleanest setup on different time frames. That's simply what multi-time frame is all about. So I don't know what is not confusing. It's just checking out multiple time frames. Just like if you look at this area here, you could see a clean break. You could see a clean break of structure and inducement and a level. What if I switch this level to the 15-minute time frame? On the 15-minute time frame, the only thing I could see here is an open close level. Why the price use the open close level? I don't know. It's not clear to me. While on the 5-minute chart, there's a whole setup there, right? And this same setup, if you switch to the 3-minute chart, you could see it look better for you. And that's how MTF works. Okay, right now on the 3-minute chart, what do you see on the 3-minute chart? You can look how better it looks. Break, you can see the pullback looks even better, just like that. That's MTF for you. So you just check multiple time frames to determine which one is cleaner for you to work with. Which time frame can you work with? I already made my the reason for selecting this break of structure clear. I made the reason for selecting that break of structure clear, but I said on the 30-minute time frame, right, we had a break of structure. We had a double break of structure on 30-minute time frame. Breaking structure here. So now just look at this. Picture this on the 30-minute time frame. Now this is why I said that you would get the same entry regardless of strategy. Someone trading fair value gaps would say, let's just look at this. Someone trading fair value gaps would say, oh, price break structure, this is in liquidity. Then there's a fair value gap here, and they're taking the entry from right here. You trading what? FNR, price break structure, you know price has to pull back into this structure it broke. And this is a sort of liquidity for you if that's how you look at it. Then because of I have my structure broken from here and my liquidity around here, and I want to choose where to enter from, of course, my focus will center around this area. So if I can't choose properly right on this time frame, what do? I switch to a smaller time frame where I can see more price action and be able to choose my level better. Where I can see more price action to be sure that my entry model is clear. So like this, I go down to the 5-minute chart and I look around that area, and around that area, you are seeing that price is giving you what? A good entry model, a break of structure, a liquidity, and a zone. So why won't I take it? Yeah. Look at this other MTF trade again. You're looking at this, right? Price is pulling in back. On the 5-minute, there's no shift. There's no shift whatsoever on the 5-minute chart. You couldn't see any shift. That price pulling in back here is going to definitely be pulling in back to give you some sort of re-entry. And you want to know how can you re-enter. You go down to the 3-minute time frame. Just check other time frames. On the 3-minute time frame, you can look at this trend.
It's looking sumptuous. It's not like
what is happening to most?
You see this downtrend. And then once price shifts, you can see
you
price.
know the funny part about this thing. You know they enjoy this thing. And the sensor.
And then
Even the last day,
There's nothing so difficult in MTF. MTF is just checking multiple time frames. Checking multiple time frames to enable yourself to know the best, the time frame that offers the entry best. The time frame that shows you the best perspective is the best entry. Wait,
Okay, you don't finish. Don't run my yash. Oh yeah.
okay. So to show you the time frame that shows you the entry best, right? So like I said, we look at trends, right? And on the 5-minute chart, if you want to take an entry, a re-entry, on this 5-minute chart, there's literally no trend here. You can't see a trend here, right? So what do? I go down to 3 minutes. And from the 3 minutes, I can now see where we have my shift, right? I can now see a full trend. And how do I see the trend? On the 3 minutes, I can see this trend. This. Okay, pulls back and this. Then price gives me this shift, right? Now, after this shift, we can now see the first pullback, which is this liquidity. The price taps my entry, price sweeps liquidity, tap my entry. So this is the simple entry. This is something very simple. So there's nothing too difficult about this MTF. It's just you checking multiple time frame to see the best. So you have to know what you want to see. It's just like while I was on a 30-minute time frame here, it's just like while I was on the 30-minute time frame here, right? While I was on the 30-minute time frame here, looking at this, I knew that we had a break of structure from here. I knew that price is going to pull back into this structure. So what I was looking out for now was to know if I can find my entry model on a smaller time frame around this area for me to get an entry, right? So now what do I do? If I switch time frames to 15 minutes and I can see that entry model there on 15 minutes, I'll take from 15 minutes. If I switch to 5 minutes and I see it on 5 minutes, I take on 5 minutes. So I switch to 5 minutes, right? And on the 5 minutes, it's clear. There's a break of structure, there's liquidity, there's entry. So why would I hesitate to take it? Right? So that's what MTF is all about. That's all MTF is all about. So I don't know if it's clear enough. So once you know what you want to see, you search different time frames to see which time frame shows me the best perspective of this. All right, so it's clear right now, right? You understand it now? All right, that's good. So make sure you do your back test. Back test, I'll give you guys an assignment. Back test structures across multiple time frames. Back test structures. Back test. Right? Each time frame prints something different. So what you need to see is which one is printing the best entry for me to be able to take my trade. So you look at multiple time frames. You don't just analyze based on one time frame. On some cases, on some days, in some occasions, you can analyze on take entry from the 4-hour time frame. That's where it's plain. So what you wanted to solve. On some cases, you need to scale down to 5-minute time frame because those time frames are offering you directional bias clearly, but you can't really find the entry model on those time frames. So you want to go down lower and see if you can find the entry model on a smaller time frame for you to take. So that's just as simple and as clear as it can be. Any pair. You can trade any pair of your choice. Any pair of your choice. Any pair you trade with this strategy, it would work. Any pair of your choice. I had a BTC trade the other day. I was showing you guys that Bitcoin trade, and it was playing out perfectly. So any pair of your choice, you feel like trading just GBP JPY. I trade GJ2 sometimes. I trade GBP JPY, and it's an amazing pair. USD JPY as well. It's also an amazing pair. US30, Nasdaq, BTC, gold, silver too is also an amazing pair. XAG USD. That's also an amazing pair. So you can use all this. You can trade this strategy on all these pairs. It's the same thing. Just follow. It's just based on the law of repetition. Follow the same thing every single time. You follow the same setup every single time. You don't have to do anything differently. It's just doing the same thing every single time. The same thing I do is every single day. It's the same thing. It's just that sometimes the strategy might play out and you won't really see it. Maybe you're not active on the chart to spot it, or you were busy or something. But it always plays out. It's always showing every single time. It's showing. It's always present. Okay. Now let us say this entry from here. Imagine this entry from here. The entry from here. If you wanted to take this entry, right? Probably if you check this area on the 1 minute time frame, there was a whole like downtrend maybe, and price gave a break of that downtrend, and price first pullback is liquidity. Price came back, took out our first pullback and tapped something there and flew. I can't go all the way down there to check it, but you know, it's clean. So it shows up everywhere. So it depends on how many setups you were able to see. Will depend on how many trades you catch, right? How many you were able to see. That's what how many trades you catch depends on. If you're only able to see one setup per week, but just make sure you don't trade under duress. Trying to trade because you want to pass an account, or because no, make sure the setup is there, everything is clean, you make your execution clean as possible, and you see how much result you get from trading. Any other question? Any other question? No other question. Now, so don't have a question. Now, so don't have a question.
For now, no. I think everything looks clearer. The basic thing is just to be able to identify the trend. I think once you identify the trend, then is to check for the way you trade, basically the break of structure or shift, and then liquidity and all. So I think it's getting clearer.
Yes.
Yeah. Then I think with this way you explained lastly, in which you need to check for which of the time frames that clearly shows the setup, I think that also makes sense.
Yes.
I noticed, I think this week, majority of the ones I took were from 5 minutes time frame. I noticed it was clearer for me from the 5 minutes and 15.
Like looking at the 1 hour, at the 4 hour time frame right here, all you can see are 3 candles with no wicks. Price is just giving you 3 big bullish candles. So there is no setup here. So I have to switch time frames, of course. I have to switch time frame, go lower and lower and lower, check which time frame is giving me an entry model to buy. That's all. That's all about multi-time frames, right? And also you can also use multi-time frame to verify your zone. Maybe you have your entry points and you can check across multiple time frames to see if this entry point is also a zone on the other time frame. Because if it's a zone on other time frame, it sometimes can be a confluence for you. Like you can see the entry, the level we took from here is a 2 hour level here. You can see a 2 hour support. It's a 1 hour support. as well as a 30-minute support. A 30-minute resistance break becomes support. So you can see that, it's multi-time frame. There's multiple levels there. That's good. All right. So if you guys don't have much questions, maybe we can end the session and we continue tomorrow. Send out the recording so you can watch the recording. So just make sure you backtest throughout the weekend. Make sure you're being busy, you're backtesting, so you can kill it next week. Even next week, we don't know what gold might do. Gold might decide to give us a huge sell next week because gold throughout yesterday, gold made some really huge compressions that may get cleared out this week. May get cleared out. Once next week starts, price may just get up to 5,000 or so and then clear out all the compression. Maybe. We don't know yet till it happens. So let's see. Let's see what gold has for us next week. And remember, always sit. Don't trade under duress. Sit on your hands. Wait. Once the entry model is clear, you strike, you execute. The market is not running. Your capital will run. If you take unnecessary losses, you lose your capital. Even when the good setup shows up, you won't be able to take advantage of them. But if you wait patiently and you wait on good entries, once they show up, you can take advantage of those good entries. And after taking advantage of the good entries, you could make yourself good profits, right? So if you chase the market will take your money. And when the market is finally ready to move, you won't be able to participate. So even if you miss one or two entries, as long as your capital is there, you can always participate on the next one and the next one and the next one and the next one. There's always room for more participation. So that's all I have to say. So have a nice weekend, and we are going to have another class tomorrow. And then from Monday, we are going to go to liquidity and we'll start talking about liquidity from Monday. So have a nice weekend, guys. Have a nice weekend. All right, so I'm going to end the session right now. I'll send the recordings later.